The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 31st. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is just fine, 877-927-6648. If you can't call in, you can send me an email, steve@tfn.com. And what was it they were putting in the heading yesterday? It was perfect. Radio show question. I think that's what was in the heading. That will get it. That'll catch my eyes out there. And, of course, inside the Tiger's Den, welcome back to all of us inside the Tiger's Den. Any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, Dow trading down 38 points at 20,991. S&P off 5, trading at 24.08. NDX 100 off 12 points. Russell's down 6. Semis are flat right now. They're trading out at 10.91. You've got gold up $8.70. Silver is back 2 pennies. Light sweet crude off $1.26. Leading the charge here to the upside. We've got Charter Communications up $4.84, about 1 4/10% out there. Regeneron Pharmaceuticals, we know that thing is headed higher, had broken out of a consolidation, up 365 today. Illumina up 340. Neuroderm Limited down up 340 as well. Tesla's up 340. A lot of 340s out there. To the downside, it's Google. That's down $10. AutoZone is off 10 as well. Goldman Sachs down about 8, 3 6/10%. O'Reilly Automotive off 6. EnerSys down 7. iRobot down 7. So we've got a few things to look at. Of course, I want to look at what you want to look at out there. Today's let's try to pick up on yesterday's conversation today as much as we can. And let's do that by first beginning with taking a look at the NQ. As the market started moving lower this morning, what seemed like in earnest, did you ask yourself the question, well, why did it stop where it stopped? Well, really a couple of reasons. If we take a look at that key level, that key line out here, so this one's for JB in the den. Let's see if we can get the actual number out here. I'm going to have to put up my data panel in order to do that. That's on a different screen, but that's okay. We'll get that here, the exact number. See, it's the Stevie's red line. I can't actually see what the number is. It is 57.7896 to be exact. Now, price got below that. We're going to watch for a closing basis below that. Now, if we did receive that, right now as we take a look at this candle today, what we have is a key reversal session, because you see the high of yesterday's session, the low of yesterday's session has been passed intraday today. And any close lower today would be a key reversal session. That is a bearish reversal signal. It's a pretty good bearish reversal signal out here. However, if price can't close down below my red line out there, again, that number was 50, well, what was it? 57.79 right now. Again, it's going to continue to change, but we'll just call it 57.79. You get it close below that. Then you have a signal. Now, that signal, that be a confirmation, quite frankly. Of course, the Doble Geek confirmation is follow through, and you certainly want to make sure that you would have follow through. What happens if you have a key reversal session with price moving higher, doing less relative energy, and you don't close below Stevie's red line? It ain't a short. It's really simple. It is simple. Doesn't mean that it can't try to rear its head tomorrow. But what it would mean, as we speak right now, it's not a short. And with regard to short, whether we're going to see some type of retracement or not, you've got to see the NQ participate in this game. Otherwise, there's no reason for the NQ not to go ahead and make an A to B equals CD to the upside. Yeah, and that would be a very large A to B equals CD pattern. We won't go there just yet. If we take a look at the NQ, is that possible? Because all price is done today, just so you know, inside of the NQ has come down and test support. Inside the ES Mini, all the ES Mini did today was come back and test a level of support. If we take a look at it out here, take a look at it. Here's the ES Mini. We're going to just look at the weekly chart out here. Remember, old resistance becomes new support. And, of course, one of those resistance lines that you and I take a look at are those wonderful TAS market profiles. The old number, the old resistance line on a weekly basis, the top of that box, 2404.50. And that's the weekly chart that we're taking a look at. Price came back there, tested it, thus far rejected it. You trade down to 2407. So that's going to be a key level to be paying attention to on the weekly time, well, on any type of time frame, because that is old resistance. The question is that now new support? Now, the ES Mini by itself, it also has a Stevie red line out here, and we can see that today all that price did was test that. Now, what's interesting here about these two equity futures contracts, inside of the ES Mini, we've got a potential for a seventh wave move. That was from 3 trading sessions ago. Let me get the cursor out here so I can give you Stevie's red line number. Come on. We're on live air out here. So if we take a look at it, that number you're going to be watching is 2406.50. 2406.50 is where you'd like to see a close below that level. Now, in this case here, you don't have a key reversal session, but you don't really need it. You ended up having, now, in Tom DeMark count system out here, you need to close down around the 2397 area or so in order to get a confirmed signal of his, well, that's actually it's not a TD sequential, that's a TD combo count out there inside of the ES Mini on a daily basis. But those are levels that you want to look at. Now, let's take that and try to understand in the game of football, because that's just simply how I'm going to go ahead and frame it, who really has the ball. Well, and if we take a look, this is what you and I looked at yesterday. We took a look at specifically inside the New York Stock Exchange and the NASDAQ. We noticed that we had closed, well, it appeared we were going to close below the zero line, which in fact we did yesterday. You can see the New York Stock Exchange at advanced decline oscillator reading is now reading out at minus 31. Inside the NASDAQ, minus 41, minus 42 out there. So you're now having follow through to the downside. Confirmation, in essence, or should be confirmation, that it is actually sellers that are in control. Now, to what degree, to what extent they're going to be able to push price down, this I don't know. I mean, we'll go take a look at market profiles. We already looked at the top of that weekly box. You got it, but of course, price has to get below that level in order to suggest some other areas of potential support out here. But at this stage of the game, inside of the New York Stock Exchange and NASDAQ Composite, it's clear that sellers are the ones with the ball. Whether they're going to fumble it or not, I don't know. Inside the Dow, it's really not the case. Here, you want the best news possible for those of you that are bears out there? You just want a gradual decline. You don't want to see a spot volatility index with a one-day rate of change of greater than 10%. And that would be Debbie Downer on your bearish bet. Steve Rhodes.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So I mentioned the VIX just as we were going into the break there, and what you ideally want to see here, we'll put this chart up on our screen, is for those of you that are bearish, believe there's going to be a market pullback, and I know how excited then that you had to be this morning when the market started cascading down. But if it had continued that cascade, what you were going to take a look at was a one-day rate of change of the volatility index, bottom panel of my screen out there, that would likely have ended up being greater than 10%. And then you know what you would have had to have done out there. That's right. You would have likely closed out that trade. Or if you're trading the futures, you'd be looking for that next bottom to be put in. Maybe 7, 8, 9 o'clock, something like that is what you would have been looking for to exit that trade. And if you're taking a look at from a longer term swing standpoint, you just want to see a nice gradual move lower out here. So, from a volatility index, spot volatility index perspective, what you're looking at here is a close around here, maybe a bit higher. Again, as long as it doesn't exceed 10%, bears are in pretty good shape out there. Then the next level, really for the bullish / bearish call out here in the spot VIX index is going to be 1157. That's a 50-day exponential moving average. Any close above that, I'm really not referring to today. Not that it can happen. But if it does happen, then that presents its own problem today. We just covered that. But then 1157 becomes the next area. And then after that, a close above that suggests we see the 1380 mark. Could be higher than 1380, but that would become your target for any of you that trade those day trading type vehicles out there. These are some elements you'd want to be paying attention to. Of course, if you're trading those you really want to be taking a look at the future contracts, the underlying instrument behind that, not necessarily the spot VIX index out there. Okay, so we've covered that. Let's go ahead and take a look at, let me see if I can open up this chart here. We're going to go take a look at gold. I think I've got it, where did I put it here? I think I put it yen gold bond 10-minute correlation. Okay, there we go. So we're going to open up this chart here. And, of course, let me change the contract out here. We have gone to Q, I believe, inside of gold. So let's do this. Just change that. There we go. Okay, so now we've got our 10-minute chart, our correlation charts here. Bonds in the center. You've got gold to the upside on the upper portion of the chart. And then we've got the Japanese yen futures on the bottom. Really just checking to make sure that there's nothing out of whack here, directionally correlated, all that stuff is for the most part in. And for the most part it is. But let's go now take a look at individually what is Goldilocks doing. Now, gold yesterday was a beautiful thing. That was a really good setup out here. We talk about, you and I, we speak about Stevie's red line fairly often. Let me see if I can find that on a worksheet out here. I can always reproduce it. I'm just seeing if I actually had it out there. Do I? I can do this one. I can, give me a moment. We'll pull it up on my screen out here. Oh, I've got just I'll do it here. I'm going to just take a look at the June contract. Tomorrow I'll have to, just the way my system here operates with these charts, I have to go ahead and set up the new symbol. But if we take this still proves the point, or at least we take a look at it. Here's the daily chart now for gold. And what, in essence, what this morning was a nice pullback. Or yesterday, just again, here's Stevie's red line. As long as, it was really 2 days ago, as long as price just keeps, and you got that price oscillator above zero, right? That's the very bottom panel of my screen out here. And that is a really beautiful setup that says unequivocally, okay, with no hesitation whatsoever. I mean zero. I don't mean zero. I mean zero hesitation whatsoever. This is a bullish setup for gold. Gold is going to go back and head back and at least either make an A to B equals C to the upside or go back and test the prior swing point highs out here. Now, can I guarantee that? Well, pretty close. Comes with a really, really good close guarantee. That guarantee comes off when you see it close below Stevie's red line, 12.5620. But if you don't get that, and all we've had now are just beautiful tests of Stevie's red line, rising price oscillator, gold wants to do just simply one thing, and that is move higher. Don't you like it when it is really that simple out here? It actually is that simple. Now, you and I can't control what the markets do, but boy, we certainly can control our ability to interpret what the markets are communicating to you and I, and that's what gold is communicating to us. Now, if we go take a look at gold and we dive down into it, let's go take a look at the August contract out here. If we take a look at it, it's really a thing of beauty. If you're looking here at the 60-minute, that's the panel number 1 chart-wise. Panel number 2, 240. You'll see those nice little green shoots out there. Panel number 3, the daily chart. Well, that's a beautiful thing. And then you've got panel number 4, the weekly, says gold is headed to 1290. 1290 becomes the next target. Well, that's back to the prior swing points out there. You clear 1290.40, and boy, it is a beautiful thing for Goldilocks. Now, just for the heck of it, and it's more than really just the heck of it, let's go put up Stevie's version of the continuous contract and see what that weekly number is, see if it's still a 1290 out here. As far as the profiles, yeah, 1290.30. Now, this chart here, folks, this chart here is the one that is more important, in my opinion, just because we have stitched together, I've stitched together, this is a synthetic contract, all of the prior data, which really provides us with better profiles out here. Now, what you and I know by taking a look at this is at 1290.30, to be exact, and we don't need to be exact here, so we'll just call it 1290, that's a real stiff resistance level. Historically, that's now a significant resistance level. Why? Because that cyan color, center of the box, closer to the top of the box, and that should be resistance. Now, does it mean that price will not clear through there? No, it does not. It means that you should watch that. And what it really means, if you close above 1290.30 on a weekly basis, it becomes uber bullish out there. Super bullish, like a Super Bowl out there. And then what you've got in the weekly chart here, you've got higher bottoms and higher highs out there. So watch gold, but it should head to that 1290 area. We're getting that confirmation in really a combination of charts and patterns that you and I love to look at. So that takes care of Goldilocks. Of course, what you'd want to see as well is you'd want to see the yen. Let's go look at the yen futures. That way we've got some live data out here, and I do mean live. Let's go take a look at it and see what kind of resistance out here. In the case of yen futures, they're looking good. 60-minute, 240-minute, daily, all green little shoots out there. And it's just simply the weekly that says 92,134, 0.92134. That's the level where you're likely to see the yen head to as well. And question, can I show the gold contract weekly chart with the downtrend line from 1920? Well, we can do that. So we'll come back out here. We're going to go ahead and put this up on a continuous contract. Give me a second to do that. We'll switch it over to we'll just switch it over to the monthly chart maybe out here. That might be the easiest. And give me a second. We can switch it back to the weekly in just a moment. Let's go ahead and edit this chart. Let's get rid of the volume panel. Let's get rid of the profile levels out here. And if we go back into this 1923.70 to be exact. We'll just go ahead and use a red line here for our downtrend. Red line. This is also where gold needs to kind of get above as well. This is Steve Rhodes with TFNN. There's your long-term trend line. Hey, bust that, baby. Drop to the moon. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we had a question that came in inside the Tigers Den from Kaz looking at light sweet crude. So let's go take a look at light sweet crude. Steve, do you see on light sweet crude more bounce after this small little bounce that is going on right now? So what I don't know, Kaz, is the time frame that you are trading it on. But if we take a look at this chart here, now in this chart, you're going to see I also have the synthetic contract going. And that way I can provide you with what I believe are better levels of support or resistance as opposed to just taking a look at the current contract. So that's what you'll see. So when you see that little squiggly line in the CL and a 1 and it doesn't match up what it is you might be doing or trading, well, then you'll know that, you know, it's just this little stitch, 1 hour. So if we take a look at the 1 hour, then we'll go ahead and blow this up here for you. What you'll be looking at out here is you're looking for light sweet crude to crack the 48.60 level to the upside. If you see it close above that, then the answer to your question is yes. That's what it will do. Now, with regard to a 1 hour chart out here, let me see if I can do this. Let me got a different set of charts. I'm going to go try to pull this up. Let me pull this up. And I'm going to change it from the 120-minute time frame as soon as it populates. See if there's any type of bottoming signal that was down there. So give me a second just to do that because I had a 120-minute chart. And what you and I will look for, you know, maybe an A to B equals CD pattern or something. You know, is there anything out there that completed? Here, we can draw that in. I've got that tool on this screen. So here's your A point on a 60-minute basis. Back here, looks like at 11 o'clock, May 29th, your B point, 10 a.m., 5:30. Your C point out here at 2 o'clock on yesterday afternoon. So we can see that it made the 1 to 1.618 A to B equals CD. And this was a bullish reversal signal here, a little bit of a piercing candle. Let me show you this way. Let me give me a moment here to do this for you. Okay, so let me pull this chart over. This is going to be your 60-minute chart here, Kaz, for light sweet crude. So we don't need to draw the A to B equals CD pattern, and you and I have already done that. Here you can see, and the reason why I want to show this to you is because I gave you some TAS market profiles earlier. Man, look at that! Look at that Team Oracle boat go. Have you guys been watching these Americups races? I mean, they're amazing. The speeds that these boats are flying around in. And I know I'm supposed to be paying attention to the stock charts out here, but are you kidding me? I mean, these are great races. I want you to pay attention to me, though. You can go watch it after, right? You go watch the races after the show. But back to this here, Kaz. What I want you to pay attention to is really Stevie's red line here, 48.46. Now, the bounce that you've seen that has taken place thus far bounced right to where it should have, especially after an A to B equals CD pattern or any pattern that confirmed out here. And the reason is because that is that oscillator unchanged line. You can see the bottom panel of my chart out here has a price oscillator that is below zero. And in order for that price oscillator to turn up, to say there's even more of a counter trend rally, you need to see price be able to take out and close above that red line. So on a 60-minute basis, if I'm you, I'm not selling this at this stage if you took the long position, but I'm watching 48.46 like a hawk or an eagle, or or an oil trader out there. Because if you do see it close above that on an hourly basis, well, that becomes very positive for you. And that says, okay, then there's more bounce. Then the next level that you're looking at, that was 48.46. Then you're looking at 48.60. And then anything above that, then the answer to your question would be yes. So do we have an A to B equals CD? Yeah. Do we even have a butterfly pattern on a 60-minute basis? Looks like we do. What's a butterfly pattern? Butterfly pattern is an expansion between two swing points out here. Those swing points being right at about 8 o'clock in the morning on May the 26th. Let's go see. Looks like it's probably close to 1.272 expansion. Yeah, which would have been 47.61. So that you've got a butterfly buy pattern out here. Now you know the levels of resistance that need to be overtaken in order for you to get more bounce. So I hope that answers your question. And then that was great because you and I got to stay inside the 1 hour chart out there. Okay, what is up? What's up next on our list of things to look at out here? That's going to make a lot of sense for you. So we've taken care of light sweet crude. We've certainly taken care of gold. We've certainly taken care of the markets. I don't know. We got in this 3-minute section here, unless somebody posts something inside the den, want me to take a look at something specifically. Let's go take a look at some individual equities. How about if we do that? Let's go take a look at Google. As we take a look at Google, this is a monthly basis out here. Let me put this on a daily chart. So Google has a key reversal session as well, much like we took a look at inside the daily NQ. No big surprise there, right? Previous days high and low have been exceeded, and today at this stage looks like you're going to have a lower close. So let's go put our market profiles up here, get a feel for whether or not we've punched down into a level of support or not, and we have not. So any retracement or pullback in Google should find support at about 936.92, the top of that daily box out there. If we take a look at the weekly time frame, well, those profiles don't even come into play. So you've got what the signals here inside of Google. Now let's go see if there's any other signal inside of Google, right? Let's not just leave it there, GOOG, and let's go see on the daily chart. You know, has price been moving higher, doing less relative energy? Well, it has. So here, another signal that's really common with what you and I have looked at inside of, for example, the NQ. The same thing inside the NDX. You can see here, price been moving higher, doing less relative energy. Wave count wise on the way up. I don't know. Let's see where we might be at. That certainly isn't G off of that. Looks like you had that continuation move, so we'll just come down here. You know, what we do have inside of Google, we can get rid of wave counts altogether. You can see the time to mark sequential, the TD13 count that took place yesterday. 1, 2, 3, 4, but you've got to get it closed below about 952, give or take, in order to get a confirming signal. I would say the signal is today, it closed below 969. You're trading 966 right now. Stevie's red line. All right, we've got a request here in the den. Says, let me go put this chart away. Says NDX day and week charts have just made a DeMark 913 count. Does this say anything to you? So let me do this. So it's a great question. So the daily chart, let me switch over. Give me a second here to do this. So we take a look at the counts. Protest. Oh, I hate those protests out there. Hey, did you see that race on Sunday? Did you see that race on Sunday when the Kiwis, I think it was Sweden that was that got a penalty against the Kiwis? Now look, I'm certainly no judge, so to speak, and I don't know all the intricacies of this racing, but there was like no way. I could not believe that they gave that race to the Kiwis. Just didn't make sense whatsoever. Okay, back to the question out here. I guess that was a strategic pause so I could pull up the charts, which I now have, and we'll go take a look at the NDX 100. We'll look at the daily. We'll look at the weekly charts. We'll go look at anything that you want, and I'll do everything I can to answer your question. And when I can't, well, I'll tell you about it. The Dow's off 43, S&P down 5. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we got a plethora of questions that have come in. So let's get to all of them. The first question was inside the NDX 100, where one of our denters has got a Tom DeMark sequential count in both the daily and the weekly. If I put the daily chart up on my screen, that's one I'm going to focus on here. We had a nice little TD sequential count. That's number 13 that shows up on my charts 1, 2, 3 trading sessions ago. Now the key here, in my studies of using Tom DeMark's system and using something different than what he does in order to give us a confirming signal, I like to use Stevie's red line. I found that works really well. Well, we can see thus far, let's go ahead and give you the exact number on that. That exact number is going to be, I need to get my cursor out here. That exact number as we speak right now today is 57.77.24. So it closed below 57.77.24 would be a nice confirming signal for that pattern. Well, guess what? It'd also be a nice confirming signal for this price relative strength divergent pattern. Price moving higher, doing less relative energy out there. If you don't close below that, then you don't have a definitive. Signal. You have a potential signal, but not a definitive signal. So today's close inside the NDX 100 will be very important. Again, you're looking for a close below 57.77.24. Key reversal, bearish engulf in this case here, the whole 9 yards. Now that would then say, from a daily perspective, where price ought to fall back to is the prior swing points, where this little TD short-term support level is about the 56.06 area. So that's what you would be targeting as your first general area for the NDX to fall to. Now, in the case of the weekly chart, and I apologize for this, I don't have that same TD sequential count on my weekly chart. Doesn't mean that it's not there. Maybe the software that had developed for this is not picking that up for some reason. I have us only in a TD confirmed 6 as of last week out there. But what this chart at least shows me is another level of support to be watching. Let's say the daily confirms is going to be 56.95.77. That would be Stevie's red line there. That's the oscillator unchanged line. So you would need to get a move below that level out here. And in essence, really, that's what I would be watching for. So we know that the markets typically go ahead and form a form a top this time of the year. So what we're seeing here is not anything unusual, not anything unusual at all, which I think flows into maybe a couple of these next questions out here. I've got one from John, one from Joe, and one from Rose out here. So let's take John's. He was in first. Different John. So John in the Tigers, and I hope that kind of helps to answer your question. John in Sarasota writes, where would the – whoops. Why didn't that work? I'll cancel that. Let's see here. There we go. Where would the S&P be after about a 10% drop? John, if we take a look at the all-time high out here in the S&P from a few days ago, this, by the way, is a weekly chart that we're looking at, a 10% drop would get you into the 2170-ish area. The reason to go ahead and pull this chart up, let's say that there we do get a overdue correction, which would be 10%. If we do get that correction, and I'm not ruling it out at all, can't rule it out because of some of the patterns that are in play out here. We just don't have the confirming signals just yet. If we were to get that, the areas that you would really be watching for in the S&P, here we're looking at a weekly chart with both weekly and monthly horizontal trading range levels out here. The red ones are the monthly, the green ones are the weekly. You can see that where the S&P has the price level that the S&P has gotten up to, it's run into resistance, the monthly level of 24.19. If price is unable to take that, then you would be anticipating a pullback in the 2300 level, maybe 2306, where that next line, that next weekly line shows up. That would be normal. To get back into your 10% area, which was, 2176, what I would be watching is the bottom of the monthly area, 2191. Got to take this one step at a time, one day at a time out here. But those are the areas I would be watching on S&P 500. Should the market unfold like this, you and I will come back to it, and we'll take a look at that. So that was for John in Sarasota. Now, Joe says, Steve, did you see Mark Faber on CNBC earlier today? He's calling for, he says that all markets are in a bubble, whereas you're suggesting longer term that the markets are going to move higher. He is thinking the opposite. And a number of other sentences that are in here. I get the gist. I did not see it, but it's not like I'm not familiar with his gloom, boom, and doom type calls out there, although he's not truly a gloom, doom, and boomer all the time. He's got long investments, as I recall. But the conclusion that all U.S. markets are in a bubble is what you wrote there. And I don't know what that necessarily means. You mean all, like every single thing out here, I guess? Are we at a major top out here? I mean, especially if putting inside the S&P 500, this monthly chart, right, where we know the price has attained a level of resistance. But if I put up the NDX 100 chart, that's not the case. We're not even close to this being the case. We're up at a resistance level out here. But here's what I know. What I know because of all the work, I don't know that Mark Faber is a pattern recognition trader, and that's what I am. I could be a fundamentalist as well as anybody out there, having been a bean counter for God knows how long, since 1981. So you do the math on that. So I don't know if his decisions are based on fundamentals, which in really hearing him speak over the years, I don't ever recall him talking about a lightning bolt pattern, an A to B equals CD, a Tom to Mark count, a horizontal trading range, anything like that. Price moving higher, doing less relative energy. I've never really heard him mention any of those types of things out there. But that's what I do. And the reason that I do that is because I think it's the most fundamental element of being able to read a stock chart and identify what it's doing out there. And so I have on Joe, what I have on 3 screens that you can't see just because I can't put all my screens on one television out here, but I've got 3 other screens out here. And this one that I have up right now shows me for every major indice in the U.S., we'll call it the NASDAQ Composite, the S&P, the Dow Jones Industrials, the NDX, the Russell, the Wilshire, the Semis, the New York Stock Exchange, basically all of them. And I have them up on my screens out here because what I know is there is a certain pattern that's been present at the top of every major bear market. When every major bear market began, these patterns were present. And so I always make sure that they're on the screen out here, especially the longer term ones, because they are the ones that provide me with the confidence as to what the market is communicating to you and I. Can things be different this time around? Yeah, I guess they can. But as I take a look at the Dow Jones as an example, and that's where my studies go back to 1896, here's the monthly chart for the Dow Jones. Let's just use that as the example, Joe. Here you can see prices moving higher. Monthly chart is doing it with strength, not without strength, but with strength. Its price oscillator, which you don't see at the bottom of the page, is above zero. Stevie's red line is 20,285. Have Mark give me a ring if we see on a monthly basis the Dow Jones get below that. Here's the weekly chart. No topping pattern out here. That was President Bottoms, President Tops out there, and the daily chart either. So I didn't see him, but I can answer to you. Do I agree that we are at a major top in the markets? Absolutely, positively not. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. So Rose wanted to take a look at Verizon Communications. Let's go take a look at it. Ticker symbol here is VZ. Looks like we might have looked at this once before. Maybe not for Rose, but let's go take a look at it. Let's go ahead and add our volume data to this chart out here. And so we've got volume, we've got our daily profiles, and we can get a feel. So the question was, where is there a good buy, right, Steve? Where will the buy on these be? And let me come over on my other chart, put in VZ. And because what Verizon is doing today, right now as we speak, Rose, is it's trading above its daily market profile. So that is a nice thing out there. If it can, in fact, close above it, that level is, by the way, 46.31, 46.41. You're trading at 46.49 right now. I'm looking for any other signs of that bottom out here. But from right there, just on my other chart here, if I see something, then I'll go ahead and pull it over for you. So I don't see anything there. Let me go ahead and put the weekly profile up here as well. Let's take a look at where these hurdles are inside of Verizon. So what I can share with you is the following, is that if in fact Verizon today closes above 46.41, you ought to see it go ahead and move up to $48. Now, you had a nice little sign of strength yesterday, and this is coming off of this bottom. If this is a bottom, and you had a nice little bullish signal back here on the trading day of May 18th, I'm sure we can find an A to B equals CD down pattern out here. So this is the old buying the D point. Here's your A point back on January 5th. Looks like your B point, maybe it's around February 15th. The C point around February 24th. So there's your A to B equals CD pattern. And he had a sign of strength. The buy point would be at some kind of retracement with light volume out here in Verizon. So preferably that would be at around 45.33. Might be 45.99. You might have to wait for it to get to 47.51 and then see a retracement. But at this stage here, it's giving you a decent bottoming signal and a decent sign of strength. A little bit of one yesterday, 16 million shares. So, Rose, I hope that helps you out. You had another question, which was to try to find a buy on LABU. LAB is a Direction Daily S&P Biotech bull out here. And I forget the indice. I'm going to have to really remember that because it's better to go take a look at the indice versus this. But nonetheless, what we can see here inside of the this specific equity, BBH. Thank you, Basil. If we take a look at this specifically, as you're looking at this, Rose, you can see that yesterday, really on the day before, so it would have been Friday, right? But yesterday, there was a clear break of a rising trend line out here, rising trend line. So this that's a bummer for it. There was about 2.8 million shares, so you had some volume accelerating to the downside. So that pattern is in place. Where's price likely to fall to? We'd have to go with 38.48 as the next area for you to be watching. You'd want to see price decelerate, not accelerate for sure. And what price would be moving into would be the bar from January 31st that had 6.5 million shares out there. So watch the 38.48-ish type area, and if it's pulling back with light volume, that might be it. Let me see if I can put the BBH up on my screen here and go take a look at the index. No, that's not it. Or I don't. I've got another ETF out here. But so Rose, just staying with LABU again. You've got the numbers. Let me make sure you have them here. Go ahead and populate on my screen. That'd be a good thing. There we go. About 38.48. Watch there. Hey, folks, it's been great to be with you. Stay tuned. Our man David White is up next. Because it's Wonderful Wednesday, you've got Tom O'Brien from 3 to 5. I'll be back with you at 1 o'clock tomorrow on Terrific Thursday. Come on over to the homepage at TFNN.com. Sign up for my newsletter service, Mastering Probability. Wouldn't you like to know what we're doing now? Take care, folks. Have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com TigerTV.com under Trading Newsletters.
You're watching Tiger TV.